Welcome to another week in review. We're going to be looking at the trading week of May 5th, 2025. Starting off with data this week, we don't have a lot until Wednesday, until FOMC, so we'll run through this quickly just to get this out of the way, but there's not a ton. Monday, should note, is a bank holiday in the UK, so the Euro session, I would assume the volume's going to be quite low if you're trading the Euro session, and also for the overnight range, the volume should be minimal in comparison to what it normally be. It's always going to be lower, but it should be even lower than it normally is. 9:45 we have services PMI. 10 a.m. we have ISM services on Monday. Tuesday, the only thing really I think to pay attention to on Tuesday would be the 10-year bond auction that comes out at 1 p.m. Other than that, pretty light. Wednesday, obviously, we have FOMC at 2 p.m. The expectation is that there's no cut for May. The market has moved over to neutral rate expectations for June as well, I believe, after that hot NFP print. June originally was priced in at over a 50% chance of a cut in June, and I believe the last time I looked at it on Friday, it changed to 60% chance that they'll hold the rate in June. So we'll see. We'll see if that's the case come June, but the expectation for Wednesday is no cuts, basically stay the same rate, so we'll see if that happens. FOMC presser is at 2:30, so 2 p.m. decision, 2:30 presser as it normally is. Thursday, we have the jobless claims at 8:30. 1 p.m. we have the 30-year bond auction. Should pay attention to that. Friday, not really much on Friday. We have a whole lot of Fed speakers pretty much the entire day, but there's not much really to pay attention to on Friday as far as that goes. So we'll jump into earnings for this week. The majority of the big earnings are out of the way as far as for the immediacy really. So Apple, Amazon, most of the mag names are out of the way. Nvidia doesn't report until the end of May, so we don't have a ton that's really going to be market impactful on a larger scale until the end of May. But ones I'm looking at would be Monday after the close. Palantir is always interesting to see. Ford will be very interesting. Tuesday after the close, we have SMCI. SMCI pre-reported, but they actually haven't released earnings as of yet. AMD will be interesting for chips, so we might see a little bit of sentiment moves for chips depending on how AMD, and I guess SMCI to an extent, but mostly how AMD reports. So that'll be interesting. Wednesday morning, Uber, Disney, those are the two big ones. After close, we have Carvana, which is always interesting to see, especially considering the used car market right now. Before open Thursday, Shopify, that'll be interesting. After close, Coinbase, again, that's another big name. So again, not a huge amount of market impactful earnings this week, but I would pay attention to some of these at least to see general market sentiment, and their guides would be very interesting, especially considering how some of the other guides have gone so far and kind of dodging around the tariffs questions, etc. So jumping into the S&P 500 futures ES here. Last week was I'll say difficult in a sense because it was very choppy to start the week off, and we didn't really have much of a decision until Wednesday on general direction, and it was difficult to catch unless you were really looking for the long trade up here and looking for a buyable dip. I was fairly neutral last week. The long trade was a little difficult to catch. We stopped exactly where you'd expect it to stop, which I'll talk about in a second. But as far as general sentiment for me up here, I'm fairly neutral. I mean, the daily is one time framing up, the weekly is one time framing up, the monthly is one time framing down. So I think where we stopped on Friday is telling. But also I wouldn't rule out, higher from here. So last week we had the first 2 days fairly tight consolidation. The first 2 days, very choppy, very, very choppy conditions. I got chopped up a little bit in this in the beginning of the week. Not a lot of direction. Tuesday to me, especially into this high, this looked very, very distributive to me. And Tuesday into Wednesday, I was looking to see if we could get a bit of a liquidation move down and what would happen if we had that move, and we certainly got it. So we had kind of a stupid overnight, to be honest, on Wednesday, but we started off the day with a nice liquidation move. This was the primary trade I took, was the liquidation move down into the low, and we stopped right into the breakaway single prints that we had from the prior week. So this P profile up here, again, P profiles can liquidate very quickly if you start seeing acceptance below value. These breakaway single prints we had from the opening range, which forced this move higher, we stopped dead on them and reversed, and then we continued higher the remainder of the day. So this kind of set the tone for the remainder of the week. Wednesday, obviously, we had the big expansion up. Thursday, again, enormously difficult. It just a very, very, very gross conditions on Thursday. There was not a lot for me there from a trade perspective personally. I did okay, but again, like these conditions can be very tricky intraday as they form. And obviously, after the close with earnings with Apple and Amazon, we nuked into the unfilled gap, the island gap that we have now. And again, we had some China news come out overnight about negotiations, and that's what ripped us higher. So where we stop, like I said, is very important. So 57.20 is, again, I'll come back to this level. If you've watched any of my videos of the last few months, 57.20 has been incredibly important to how I'm seeing this market personally on a larger scale. So 57.20, just to look at the higher time frames here, is the bottom of this huge prior monthly range that we were sitting in. So when we broke down from Liberation Day right here on April 2nd, we had a stark rejection of this huge 3-month range, huge 3-month balance that we put in, a huge rejection, and that started the liquidation move down. We're right back to where we started. So to me, where we're sitting here is pivotal, probably for the next few months, I'd say. Next month at least, if not few months. So really what we're looking at here, this is the daily time frame. We have 57.20 is the bottom of this huge stacked monthly balance range. It is the 200-day moving average of 57.70 or 57.80 right here, and it's the top of the Liberation Day rejection basically at 57.70. So this 57.20 to 57.80 range, basically the top range, you can almost just look at it as the wick. The wick of the Liberation Day range as well as the 200-day moving average is going to be really impactful to how this market's going to trade. So there's a reason we stopped here, right? So we had this huge expansion up. We had a massive amount of impulses try and get us higher, and we just couldn't break through this area. I'm open to either side of the trade up here. I think there's two possibilities really in the short term. This type of expansion and consolidation into the high, typically you could see this as you could typically see a continuation from consolidation like this, and then obviously the question is whether or not we can stay inside the 57.20 range and try and work our way higher. So the way I'm looking at this, my list for the week, my line in the sand for the week for buyers and sellers really is going to be this 57.20 to 5700 range. If we're unable to accept inside of 57.20, so if we see a really big drive up in here that gets offered very quickly, we see a lot of volume come in here and we see it reject and we sweep out Friday's high and we fail, then I think the likelihood of a continuation move higher in the short term is unlikely. So if we're failing up in this range right here, I want to stay on the short side, and I'd like to see us get back down into the meat of last week's value to make a larger decision. So we closed outside of value. We closed outside of weekly value. Back testing that would be fairly normal. A strong market won't even back test this. So if we're really going to continue to rip, we're going to see 57.20. We're going to see the buyers above this, and we're going to see moves straight up into the Liberation Day high and into the 200-day moving average up here. So if we see a huge amount of volume get above 57.20 and we see continuation buying, I'll stay on the long side. And the places I'll look would be 57.70 into the 200-day and the Liberation Day high, and then ultimately try and test up here into the 5800s. This is January low, as well as the 100-day moving average. If we're failing below 5700s, I'll stay on the sell side and I'll try and see what kind of interest we have down back inside last week's value. If we try and form a higher low for a continuation, back up, or if we just see a lot of selling volume, a lot of pukes, a lot of this late inventory, these late buyers, a lot of them just puking their hands, then I'll stay on the short side. So the first place I'm going to look if we're failing at 5700 would be the RTH low is down here, down into 5660s. I'm going to be looking down into 5660 to 5640 to clean up. We have a velocity gap down in here. You can't see it on this chart, But we have a velocity gap, which is unfilled up into 5650s, which I can actually show you from that day. So this is my footprint chart. I don't normally show this on the weekly reviews because honestly it's not going to help most people when I'm talking about higher levels, but right here we have a velocity gap which is unfilled, 5650 to 5640s. These typically will backfill, especially if we're revisiting these areas. These are definitely magnets, so I'd keep this in mind. If we're failing 5700s, I'm going to be looking for that move back down to 5650s and then potentially make a decision right here. If we're holding that NFP area, if we come back down and we can't accept back inside last week's value, if we're finding bids somewhere down in this range, then I'll look for a low to form and to see if we can back test this again. This gets really, really slippery if we start offering below Thursday's low. So if we see acceptance below basically 5630s, then I think the likelihood of us moving back down and testing last week's POC, or at least testing the M period spike base of this breakaway day up, is very likely. We have a naked POC down here as well, which we should be aware of. So again, failing 5700s, I'll look for 5640s, then 5600 area, and then if it's really nasty and we see a lot of continuation selling, then I'll look all the way down to 5570s, 5550s in the short term. If we start getting below 5550s, the chances of this being a pretty strong swing high are there, and I'd be looking as low as cleaning up these single prints down to the bottom of this range all the way down into 5380s. I think larger decisions are going to be made up here. We should see a lot of volume up in this range. We should see some positioning start to form. I'm really open to either side. Where I would get very bullish in the short term is if we see continued acceptance inside 5720s. I'd want to be looking for 5800s at least, but I think more likely if we're continuing to accept inside 5720s, we're going to see an accelerated move higher. We could get up all the way back into 6K potentially in the short term. So it'll be very interesting. This entire range up here is going to be super impactful. So be very careful and watch very closely what happens this week inside this 5720 to 5770 range. Be very, very mindful of what happens up here. It's going to set the tone for a while on this market. NASDAQ obviously outperformed. We were leading, as it should. We were leading the rallies with the NASDAQ. We tested the 200-day moving average. That's this purple line up here. I'm going to be looking for basically the exact same thing on the NASDAQ. And a strong market is going to see that continuation buying. You're going to want to see, if you're looking to be a buyer, if you're bullish on this market, you want to see NAS continue to lead. You want to see this outperform. You want to see a really strong break through 20,300s, through this 200-day. And you want to see us getting back up into 20,700, where this is going to be a major test. So again, this entire range, basically from 20,040s to the top of the Liberation Day spike to 20,700s. This is hugely impactful, and this will set the tone for the immediate future of this market, in my opinion. If we're accepting below 20,040s, I'm going to stay on the short side. And again, I'm going to look for the same thing. I'm going to look for us to clean up back into last week's value, test down into 19,700s and all the way potentially down into 19,500s. It's entirely possible, again, we find a decent low in here, we put in a higher low, and we continue that trip back up. Entirely possible. Big thing here as well is having a kind of a neutral bias going into this week. Because we're at such a massive inflection point in this market, I think holding a strict bias either direction is quite detrimental. Again, we're in a headline-driven market. We haven't had a headline really be able to sell us in what feels like, a few weeks at this point. We've had some pretty shitty numbers come out, some pretty bad headlines that we haven't been able to sell. We're at an area in this market where we certainly could sell. We certainly could put it in a lower high on higher time frames. But the exact opposite could happen too. If we start finding acceptance back up into this range and finding more buyers and finding continuation buying whether it's headline driven or just purely mechanical buying, this market could go a lot higher very quickly here, especially if we start getting above 57.20s. So just be cautious. Again, like I said, like this entire range up here is going to be hugely impactful. I'm holding zero bias this week. I could flip either side of this market at this point, and I'm just going to try and take this day by day and really just work my general positioning and general bias around how we trade basically up into Friday's high. So hopefully that helps. Be careful this week. Like I said, FOMC really is the big kicker this week. Again, expectation is that rates don't change. If that's different, if Powell comes out and cuts rates or raises rates or does something the market's not expecting, then we will see an outsized move either direction as the market isn't adequately priced. So just keep that in mind. Be careful this week. Good luck. Thanks.